Ladies and gentlemen, good day and welcome to the Q3 FY26 earnings conference call for HG Infra Engineering Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Selina Sheikh from Go India Advisors. Thank you, and over to you, ma'am.
Good evening, everyone, and welcome to HG Infra Engineering Limited earnings call to discuss the Q3 and 9M FY26 operational and financial performance, hosted by Go India Advisors. We have on the call Mr. Harendra Singh, Chairman and Managing Director, Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risk that the company faces. We now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Selina. Good evening, everyone, and a warm welcome each one of you joining us on the call today. At HG Infra, we are immensely proud and delighted to have spent over 23 years shaping the backbone of India's infrastructure and marked recently by our 24th Foundation Day. As we reflect on this journey with pride and advance with purpose, it has been built on trust, driven by passion, and defined by quality. These enduring values continue to guide us in construction infrastructure that propels India's progress. To meet India's evolving requirements, we are scaling for success, fast-tracking innovation to build smarter, faster, and safer infrastructure. We are entering new sectors such as solar energy, transmission, and battery storage, guided by the simple belief that infrastructure must be as dynamic, as diverse as the nation it serves. Union Budget of 26-27 has strengthened the road sector with higher allocation to Ministry of Road Transport at 3.9 lakh crore rupees, up 8% year-on-year, and increased funding for National Highway Authority of India to 1.87 lakh crore. This enhanced investment is expected to accelerate development of national highway, expressways, and greenfield corridors. Leveraging our strong execution capabilities, HG Infra are well positioned to benefit from this momentum, with 45-plus road projects delivered, and our track record reflects engineering excellence, timely execution, and durable quality. As of December 25, our roads and highway order books stands at 8,460 crores, constituting about 62% of the total order. Simultaneously, the Union Budget 26-27 again remains focused for rail infrastructure, with a capital outlay of 2.5 lakh crore for Indian Railways to support network expansion, capacity enhancement, and modernization. Aligned with this momentum, HGIL has strategically diversified into rail and metro infrastructure. With 7-plus ongoing projects, our presence in this segment reflects growing technical expertise, disciplined execution, and capability to deliver complex infrastructure. Green energy also marks a significant new phase in HGIL's growth journey, as we have already executed 350-plus megawatt and remaining 250 megawatt likely to be completed by March 26 out of total 600 megawatt capacity ordered, which is supported by integrated storage solution, reinforcing our focus on sustainable and future-ready infrastructure. Let me begin with a glimpse of our operational highlights. As of Q3 FY26, the company's order book stood at rupees 13,624 crore, comprising 8,734 crore from roads and highways, 2,779 crore from railways and metro, 1,620 crore from BESS, and 394 crore for solar and transmission projects, rest 98 from other sectors. Segment-wise, roads and highway contributes 64%, followed by railways 20%, renewables 15%, and other segment 1%. Regarding the updates on the EPC and highway projects, we almost has 99% Ganga projects completed, and COD are being applied, likely to be obtained within this quarter only. The Jamshedpur elevated project is running smoothly with current progress at 36.9%. The Neemlangla Tumkur project is gaining execution momentum and reached 54.4% completion. The appointed date of DLF project is declared as 30th December 25, and the project is under mobilization stage. Regarding HAM and highway projects, the Karnal Ring Road has reached 94.2% completion, marking steady progress and likely to get provisional completion in Q4 FY26. As shared in the previous quarter, provisional completion certificates for Raipur-Visakhapatnam Corridor OD5 and OD6 projects already received, and the both projects remain close to completion. The Raipur-Visakhapatnam, again AP project, is also nearing completion, and we have received provisional completion certificate with effect from May 25. All three projects of Raipur-Visakhapatnam corridor, that are OD5, 6 and AP1, continues to be on track for COD in next few months only. The Khammam-Devarapalle package 8 KD1 and 2, where the PCC already received, which are at 99.1 and 96.9% completion, both the packages are expected to be 100% completed in Q4 FY26. The Chennai-Tirupati HAM project reached at 40.1%. The provisional appointed date for the Varanasi-Kolkata Corridor Package 13 has been received with effect on 30th September 25, and the project progress of Package 13 stands at 19.4%. For Package 10, the appointed date is expected to be received in Q4 26. For Kosi Parikrama Package number 6 of Ayodhya, the concession agreement is signed on 21st of June 25, and the appointed date has recently been declared on 16 Jan 26. The project's execution stands at 3.4%. For the Narol Sarkhej project, financial closure which was achieved and the appointed date was received with effect from 19 August 25, the project execution stands at 15.6%. Turning to the progress of railway projects, the DMRC metro project is 99% completed and progressing as per the scheduled timelines and targeting its completion in Q1 FY27. The Bilaspur Himachal Pradesh Railway RVNL project is 87.8% completed and targeted for completion in Q1 FY27. The Kanpur Railway Station project is at 44.9%. Dhule-Nardana Railway project has achieved 35% progress, and the Gaya-Sonnagar and Karanjgaon projects are at 27.3 and 32.7% completion respectively. Progress across these projects was impacted due to abnormal rains, but it is expected to pick up in this quarter. The appointed date for the New Delhi Railway Station project has been declared as 6 August 25. After the initial hiccup related to the utility shifting and design, the execution is now at initial phase with 6.9% completion. The appointed date of newly awarded Thane Metro project has been declared as 11th January 26, and the project is in the mobilization stage. On the solar project, as of 31st of December 25, overall physical progress across the project stands at approximately 95.8%, despite delays in few months caused because of the prolonged and heavy monsoon condition in Rajasthan, as well as the land-related challenges affecting the transmission line infrastructure development. These projects got delayed. Despite of these site-specific constraints, the company has been able to execute the projects largely in line with the planned schedule. The company is putting adequate resources to commission all the plants within the revised contractual timelines in the coming months. The anticipated commissioning will also enable the drawdown of the remaining sanctioned debt and clear the outstanding liabilities. In view of the challenges faced by the developers in Rajasthan, the Ministry of New and Renewable Energy, that is MNRE, has extended the commissioning guidelines for the solar plant Agan Kusum C, schemes A and C, up to 31st March 26. From a financing perspective, approximately 86% of the required project debt has been sanctioned, out of which around 74% being disbursed. The balance sanction and disbursements are likely to happen post-commissioning of the installed plants. In the interim, to bridge the funding gap and ensure timely project completion, the company has availed additional working capital limits. Consequently, the overall debt level at the company level has temporarily increased, which will be reduced in coming months once solar balance disbursement of 425 crore will be received. As of December 25, the total equity investment in these solar projects stands at 731 crore. As of now, the total amount billed to the DISCOM is 72.88 crore, and the total of 56.33 crore has been collected till date. Regarding the BESS project, So there are the three projects, two from GUNL, one for NVN, totaling 104,070 megawatt hour. The procurement process of BESS project has been initiated, and the orders for the long lead components like power transformer, GI switch gear systems has been placed by the company, and the exhausting technical due diligence has been conducted for DC block container from both overseas and domestic vendors. Final orders for the same is likely to be placed by March 26. In Jan 26, company formed SPV and while purchased the land for the Banaskantha project, and both the projects have now got the approval of connectivity agreement. Financial closure of Banaskantha project is completed, and Dholera is at advanced stage of closure and expected to be complete by March 26. Upon completion and commissioning of all the BESS projects, the company expects annual revenue of 225 crore from BESS. Regarding the transmission project, which is progressing well as per the timelines, the SPV being formed and the design and the long lead items are booked. This is the update on the monetization of 5 new HAM assets where the PCC already being received. In August 25, we executed a binding offer document with Neo Infra Income Opportunities Fund for the divestment of our HAM portfolio in 5 wholly owned subsidiaries. We have executed the security purchase agreement of all 5 projects during the previous quarter. We had already initiated the process of fulfilling all condition precedents, including obtaining client's approval, lender's consent, and completing requisite representation and warranties. We have received lender's NOC for Khammam Development Package 1 and 2, and for the Raipur Visakhapatnam Project Package 5, NOC has been received from one of the senior lenders, and the approvals from remaining 2 lenders are expected shortly. Further, NHAI has also approved the NOC of Khammam Development Package 2. From the remaining projects, we are in continuous follow-up with NHAI and respective lenders and anticipate receiving the required NOC within the next month. Based on the current progress, we are expected to complete the transaction for at least 3 of the projects, SPVs, within the current financial year, and we are expecting around 500 to 600 crore as the first part of consideration for these projects. Regarding equity requirement on HAM projects, the total equity requirement for 11 HAM projects is 1,750 crore. As of December 25, 1,242 crore has been infused, and the remaining amount, 117, is scheduled for the infusion in 3 months for the year, followed by 220 crore in FY27 and 171 crore in FY28. Moving on to the financial highlights of Q3 FY26 and 9 months of FY26. Standalone financials, revenue for Q3 FY26 reached 1,450 crore with an EBITDA of 224 crore at a margin of 15.5% EBITDA. PAT for the Q3 FY26 stood at 97 crore with a PAT margin of 6.7% compared to rupees 137 crore and at 9.1% in Q3 FY25. Revenue for 9 months FY26 reached 4,313 crore with an EBITDA of 607 crore at an EBITDA margin of 14.1%. PAT for 9 months FY26 stood at 290 crore with a PAT margin of 6.7% compared to 365 crore and a margin of 8.9% in 9 months FY25. On a standalone basis, our gross debt stands at 1,545 crore. This comprises of 914 crore in working capital, 631 crore for term loans and current maturity trades limited and medium-term debt. Regarding the consolidated number, revenue for Q3 FY26 reached at 1,421 crore with an EBITDA at 309 crore of 21.1% margin. PAT for Q3 FY26 stood at 94 crore with a PAT margin of 6.6% compared to 115 crore at margin of 9.1% in Q3 FY25. Revenue for 9 months FY26 reached 3,808 crore with an EBITDA of 775 crore and an EBITDA margin of 20.3%. PAT for 9 months FY26 stood at 245 crore with a PAT margin of 6.4% compared to 358 crore at a margin of 9.7% in 9 months FY25. Update on the recent CBI matter. is, as you are aware, that the CBI and Anti-Corruption Bureau, Patna, has conducted search in our offices in the month of January. The necessary updates for the same are already disclosed through the stock exchanges. We are extending our full support to the agencies in the matter and will continue to update the investors through our disclosure on the stock exchange upon any material development, and would like to mention that there has not been any impact on the operations and financial position of the company. Turning on to the future strategy and outlook, HG has outperformed exceptionally in all fronts against all odds and delivered timely projects with great trust, passion, and quality. As you all know, that there has been less traction in new projects awarding in the last 18 months from NHAI, but our deliberation with NHAI things will again flourish with new projects bid. In FY 9 months of FY26, we have backed new projects worth 3,300 crores up to date, and quite hopeful to add project worth around 4,000 to 5,000 crore by March 26. I will now hand over the call to our IR advisor and request to open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. We also request that you please restrict yourselves to 2 questions only. You may rejoin the queue if you have further questions. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. Sir, can you please help us with the update on the appointed date for Nagpur EPC orders? I think there were 2 projects which were of around 42 billion. And is there a risk of cancellation of the orders?
Probably the cancellation of these projects is not at all in pipeline or in discussion. The land acquisition, which actually has been impacted in the recent past because of the municipal elections in Maharashtra. So it is going on at not at the same pace as we were envisaged. So probably by April or May, it looks like that 70% of the land, which is a prerequisite for LOA to be issued. By that time, we are checking upon with the authorities what is the present recent update.
So expect maybe the work to start in H2 F27. Is that a fair assumption given the current information?
Yeah. Correct.
Understood. Second thing also, of course, NHAI tender pipeline has been pretty weak for last several quarters. What are you seeing the progress on the ground? Are you hopeful of a sharp momentum in the balance of the fiscal, or do you think the progress will most likely happen in F27 and F26 will again be a dull year?
See, as far as development and with the getting the feelers from the authority, it is very promising that the pipeline is so long, and the land acquisition which is a very much prerequisite condition for the authority to award any project which earlier was not there, as well as the quality of the DPR validation through their DPR cell is taking some time. The project where the cabinet approval is already being obtained, they are almost more than 60,000 crores of project. But then again, there are many more projects where the cabinet approval is likely to happen within the shortest possible time. So it's a matter of only few months from now where these projects of around 6 lakh crore rupees, which they have given into their domain also, would be likely to be awarded, not for this current financial year, but definitely for the next year.
My last question, the revenue guidance. Are you still maintaining the guidance of 65 billion for the fiscal, or do you think there is a risk to that number?
There has been a bit of slackness as well as the progress because of the prolonged monsoon. This is one reason, and the retrieving monsoon which has affected the Tirupati project. But even then, we are quite hopeful that we will be overpassing the last year number. And looking at this, the appointed date of Jharkhand Package 10, which was supposed to be there, but is not yet issued. Likely in next month only it would be given to us. So that has impacted around 200 to 300 crore rupees. Otherwise, we would be in and around the last year number plus some percentage over the number.
Understood, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and one. Our next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah. Sir, any one-offs in the EBITDA margin this time?
Sorry?
Were there any one-offs in the margin, or 15.5% is normal EPC margins for 3Q?
The normal EPC margin, there is no additional exceptional item which has been added here.
Okay. And sir, why was the tax rate so higher at 31.5% for the quarter?
So there has been, say, for last year, there has been for MSME 6 crores of provision which has been made in this year for the tax matter. So that for that reason, it is a bit higher.
Okay. Sir, secondly, when do we expect to complete the solar projects? And when do you see the debt coming down?
So the debt of 425 crores, which is yet we need to receive from this SPV, from the lenders to SPV and in turn to HG, is likely that around 200 crore rupees would be there by March and followed by in April, because the entire commissioning is now being deferred till March because of the all local disturbances and the issues which we already have faced, all other companies have faced rather. So in April and May, in Q1, we would be getting the entire debt once we commission these plants in totality.
So, but for the incremental work also, which is spending roughly 400 odd crores, for that also will be required to put another money, right? To support the SPV.
No, as far as execution is concerned, it is already 98% plus completed. So the fund which we require for the, say, nearing completion is not that big amount. There's a 35-40 crore rupees which will be required in Q4 only for entire completion. So the money which we will be collecting is 425 crore rupees coming from the SPV through debt.
But order book seems quite high in the solar projects as of December.
Solar? No, it's transmission and solar.
Okay. Got it. And sir, when do we expect to start the work for the BESS projects? And your guidance for FY27, given the expectation from the revenue expectation from the MSRDC projects would be quite lower, given it likely to start in second half. So what would be your guidance for 27?
So what we have designed as the AOP plans with the existing order book and likely to execute some 2,000 numbers within this year. So with that number, the best execution which is likely to be completed for the next year only, the entire completion would be there. As far as if we are not considering even this Nagpur Chandrapur, which is MSRDC project. So what is to be done with the new projects which we are likely to bag in the coming months only? We are considering some 1,500 crore rupees from the new project or the MSRDC project. All these projects which are already just started or just one project which is to be started would be good enough to reach out to around a number of 7,000 crores for the next year.
Okay. And sir, when do we expect to receive the appointed date for the North HAM?
The
one HAM which is pending.
The project we have started, 3% of completed, started just recently. Appointed date was declared on the 16th of January.
Okay.
So just the one project is balanced where the appointed date is not yet declared, which is Jharkhand Package 10.
Package 10.
Yeah.
Okay. Thank you, sir. Those are my questions.
Thank you. Participants, to ask a question, you may press star and 1. Our next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Sir, just again coming back on the first one on the revenue front. So you said that close to 2,000 crore that we are looking in the fourth quarter. So that is there. And in the next year, we are saying 7,000 odd crore. So even if I look at broadly, it would be a kind of a 13% kind of a growth that we are looking at. So still not able to understand whatever the shortfall which is there for FY26. We were earlier looking in FY27 15% plus. So now again 200-300 crore shortfall is there for FY26. So for 27. Previously, we are looking at 7,800 odd crores. So, sharp of all that we are looking at in FY27.
So ultimately, there has been a big reason for the shortfall for the year, where because of the prolonged monsoon as well the appointed date for this particular project, which has been delayed, Jharkhand Package 10. So this has been the reason which we are quite hopeful that we would be picking it up and around 6,200 odd crore rupees which we do during the year. So the balance for the year 25, 26, 27, we are estimating for the at least 1,500 crore rupees would be done from the project where the appointed date, which is not yet issued, or LOA is yet awaited, which is MSRDC, or any other project which you would be likely to get in the coming months only. So rest, apart from 1,500, if we do well, all other projects progress would be yielding around 5,500. So that we have estimated that we will be touching around 7,000 crore without much of a problem for the next year.
Okay. And the 1,800 odd crore that we have already got the inflow till now, and 4 to 5,000 crore that we are looking at by March. So there just wanted a more clarity. So 2-3 aspects. One is how much worth of value of bids that we have already submitted, and also if you can break it up into whether NHI, MORS, or railway, or solar, or BES, or any other sector. And how much more are we planning to bid, whatever the tenders till now is available?
See, around 14,000 of crores of highway projects already being bidded, EPC and HAM. There are 3 EPC, 5 HAM, which the results are yet awaited. And till March, we are expected to bid 48,000 crores of projects. So we are expecting that these are the projects, and apart from the projects which we are aligning with private developers also. So those are the projects which we are quite hopeful that give us the opportunity for the year. Railway, we are already one project where the bidded, but the second is for 4,600 crores of project which already has bidded, the bid yet to open. BESS, around 4,400 crores of 4,400 megawatt of bid is yet to be submitted, and 2,760 megawatt of bid being done, where the results are yet awaited.
What would be the roughly value of this 1,400 megawatt that we bidded and 2,760 that we are planning to bid? So in terms of the EPC, I'm particularly asking.
That would be roughly around 8,000 crores.
Put together, combined.
Put together, which we have already bidded or likely to bid.
Okay, got it. And in terms of margin, this 15-16% that guidance for couple of years will remain intact, or are we facing a kind of a competition, and maybe going forward the margin can be on the lower side?
So as of now, the project which we are already having in hand, which do have this margin, this is for sure. But in near future, definitely as the market trend is giving a bit of a sense of correction, where the margins are likely to be not in the same number, would be around 14 or say that number. So in any case, when we bid and we try to see that energy, we are not going to see that 10 to 12% margins are the doable kind of a margin for us. But we are looking at the project which having 14 odd % in any case for the future bids.
And then we are open to bid for BOT toll also, or we will prefer through the subcontracting mode?
No, we are not yet explored this particular option as of now.
Yeah. Lastly, just a couple of balance sheet items: inventory, debtors, trade payable, mobilization, unbilled retention, HAM debtors, solar debtors.
So the mobilization advance is 260 crore rupees, and the stock stands at 358 crore rupees, and the debtors are at 1,551 crore rupees, out of which HAM debtors are 579. Solar SPVs do have 330, so these are all SPV. Ganga is at 277 crore rupees, and others and railway are around 200 crore rupees. And the current asset, which is unbilled, is 1,448 crore rupees.
1,448 crore. And trade payable?
Sorry to
in solar and HAM do have 700 crore rupees.
No, total trade payable, which was 1,177 crores at September end.
Trade payable is 1,298 crore rupees, including retention.
Okay, but inventory total you said.
Shravan, sorry to interrupt. We request you to please rejoin the queue.
I know. I am completing this. This is for everybody. This is not a question. I understand this. So that's what I'm asking. If the promoter is not having a problem, I think you should be keeping silence. Sorry, sir. Can you please again? Yeah, and consolidate and console cash is.
Console, I'm not having the right number. I think we would be giving. We'll come back to you. Oh, and you're asking for console debt.
Yeah, console debt, gross debt and console cash.
This debt is there with me. Console debt 6,032 crore rupees, and console cash is 255 crore rupees.
255 crore rupees. And BES equity till now the same 10 crore is invested, and the balance how much to be invested in fourth quarter and 27-28?
So solar we have invested full equity 731 crore rupees. No further requirement is there. BES for the year would be around 99 crore rupees. Already 16 crore rupees invested till date.
And 27-28? BES how much to be?
Best would be 350. So total equity requirement for 26-27 would be 605 crore rupees, including HAM.
Okay. Got it, sir. Thank you and all the best.
Thank you. Participants, to ask a question, you may press star and 1. Our next question is from the line of Manish Gada, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Yeah. Hi, sir. I have one
audible.
query. Yeah. As of now, in 9 months, we have done around 3,807 crore of revenues. So in the fourth quarter, what do you expect? Means what is?
See, this is the consolidated number of 3,800 crore rupees. On that standalone, we already have done 4,300 crore rupees. We normally count our turnover on a standalone basis. But for the last quarter, we are expecting to do around 2,000 crore.
Okay. And what will be the EBITDA margin and the profit margin, sir? We are expecting the same thing, or it will come down a bit?
Roughly around 15%.
15%. Okay, sir. And sir, one more query is regarding you told that you're having the 4,000 to 5,000 crores of, or you'll get the work in this quarter. How confident are you of getting that, sir?
This we already have submitted and the advanced stage of certain for the private developers also, which we are hoping for. So this is how we are looking at around 4,000 odd crore rupees or 4,000 to 5,000 crores of orders likely to be added in this till March only.
Okay, sir. Okay. Thank you, sir. All the best.
Thank you.
Thank you.
Ladies and gentlemen, to ask a question, you may press star and 1. Our next question comes from the line of Vivek Joshi, an individual investor. Please go ahead.
Mr. Singh, I just want to understand one thing. Can you just throw some more light on the CBI visiting our premises and whether any of the employees were involved in any kind of illegitimate activity?
See, the matter, whatever has been reported, we already have reported to the stock exchange. So nothing beyond that is with, as far as it's yet to be updated. So if in case any objection would be there, we will give it.
No, but the submission that will be made with the stock exchange, it doesn't talk about whether any of the employee was involved, because we see a dramatic exit of 3 senior executives from the company. So are we in any way, or any of the employee or anyone from the management is involved in any of the activity? Hello? Yes?
This is not any way related to this particular matter.
So how do we get any update on this? I mean, why did the CBI come?
No, but again, it's a matter is sub judice, and whatever we state from the matter of updation would be given to the stock exchanges as a communication.
And not to the shareholders, is it?
No, it can be given, but there is no update as such. We already updated it.
No, no, I'm not asking for any update. I'm only asking what was the reason why CBI came, because whenever CBI or IT people come, they come with some sort of an explanation with respect to so and so matter. We have come here. So can you just throw some light on that?
I think CBI do not have any reason to say search any place. They do have their own reason. They did that, and whatever was the event, we have updated the stock exchange. So there has not been any transaction, nothing doing. So that has been updated.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, sir, till now, 9 months, how much CapEx we have done, and going forward, so we used to say minimal CapEx, so that stand remains.
What kind of a CapEx?
For 9 months, how much equipment? So at a standalone level, how much CapEx?
Hardly, I think it's around 30 or 5 odd crore rupees invested in this particular 9 months, and not a major would be done because so the kind of a project which we are having mix of that. So we do have a good amount of machines and equipment.
Okay. And this you said this date of 1545 odd crore, so maybe 200 crore once we get the solar disbursement, it would be reduced, or that is one part. And second, apart from that, any further option in terms of the reduction by this merchant, and how one can then look at for FY27 onwards the date?
So basically there have been two big reasons. One is the solar debt. Second is the debtor and the say current receive. Say this is the current asset. So this is a very high, all-time high, because the project which we are at this stage is around 10 big size projects, including solar. It is a 12 big size projects which are at this particular verge of this, where certain unbilled is there, contract assets, and certain debtors that they have gone high. So once we are 100% at this stage, completion is being done and the COD being done and the whatever unbilled is being billed and the debtors would be received. So this will give a significant relief to the debt.
Okay. Got it. And this BES, you said the entire 1600 crore order book which is there will be executed by FY27 or half of 27-28?
Which is 20 battery?
BESS.
You are talking about battery.
BESS. BESS.
Around 85% of the BESS would be completed by March, because the third BESS do have the timeline till June 27.
Okay. Got it. And in the railway, so out of broadly currently 2,800 odd crore, how much one can look at to
around we would be doing around 1,700 crore rupees from this project, railway.
Okay. Got it. Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Our next question is from the line of Manish Gada, an individual investor. Please go ahead.
Hi, sir. Sorry to ask you again. So the profit margin has been declining. So what's the reason for that?
So in the last 3 quarters, it was at a decline stage because of some modified profit projection in few of the projects, especially Ganga and Solar, and one more project of NHI. Now they are stabilized.
Because the last quarter also, sir, it was 6.7%.
No, I'm not talking about the PAT. We are talking about the EBITDA number, so which is around.
No, I'm talking the PAT margin. The PAT margin also, it has been declined from 9% to 6.7%. The reason behind it?
So this is the tax rate, I think, in one of the exceptional reasons which has been affected this financial. Ultimately, it is 25%, but this time it is 32%. For the reason which is a kind of a provisioning being done, for tax provisioning being done for the last year. Okay, so.
Okay.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Vaibhav Shah from JM Financial. Please go ahead.
Sir, assuming the LOA comes from MSRDC in the first half of this year, so we won the L1 in May 24. There's almost a gap of 2 years. So will the bid be revised or can it impact our margins?
There is no update as such as for the revision and anything is concerned. It's the bid validity we are extending every time. So we are quite hopeful because the land acquisition is going on. Our team site at the project level, they are witnessing the land position, etc. So we are quite hopeful that very soon it is going to be awarded. But it's a matter of only the government reason where the land availability is was not there.
Sir, but if we accept the current bid which we had submitted 2 years back, so won't the margins be impacted on the project when we execute it?
No, if we just discount that number, let's say if the order is not there, so we would be having a less number of orders in any case, which is a balance order. In case what if you are trying to tell. So it's basically then the order in the forthcoming months and the forthcoming year need to be added to just maintain that streak of around 10 to 15% year-on-year growth.
So what I was coming from is that if the LOA had come earlier, a year back, and we would have been already executing the project around 50-60% and now, so what margins would we have built in that time of bidding, and what would we be doing once we start the execution, say sometime in second half?
No, margins in any case are not going because these kind of a project do have price escalation. So anything from the base date would be added to this hit for the price escalation, be it negative or.
So it does have PVC clause.
Yeah, there's a PV clause.
Oh, okay. Thank you, sir. Sir, one more question. What will be the order inflow in the 9 months?
Sir, request you to please rejoin the queue if you have any further questions.
Sure.
Thank you. Our next question is from the line of Bhavin Modi from Anand Rathi. Please go ahead.
Yes. Thank you for the opportunity. So last call you discussed something about the inflow from the Adani Group. So what is the status with that?
The discussion is at the advanced stage. We have submitted our and there are twice the negotiation or the further terms and condition has been discussed. Say one more bids or few more bids also has been in advanced stage of discussion with Adani Group and one more group.
And so these are with respect to all the road projects, or is it diversified?
Roads and rail.
Okay. And in the last call, you also mentioned about entering into the building construction space, and the green hydrogen space. So any progress there?
Yeah, green hydrogen. Yesterday only this bid was there, but we were not there in the race. We stood L3, but we would be looking in the future bids for the hydrogen also.
Okay. And so what is our order inflow year to date?
There is 3,300 crore rupees for the year.
Thank you. Thanks.
Thank you. Our next question is from the line of Ishita Lodha from Swan Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, can you clarify on the execution guidance for FY27? How much are you expecting from roads, railways, BESS, and solar? Also, as a follow-up, can you also let us know the order inflow target for FY27 for future growth?
So already has been guided that we are looking at about say 10 to 12% year-on-year number as far as FY27 is concerned, roughly would be 7,000. And as far as inflow guidance, we are targeting around 10 to 12,000 crores of order in the year FY26-27.
So out of the 7,000 crore execution, 1,500 is expected from the new project.
So that we have considered that out of the existing project, which including Varanasi Kolkata package 10, and excluding this project of MSRDC, around 5,500 crore would be from this project already started, and including this. And the project likely with in the near future, including MSRDC, we are looking at 1,500 crores from those projects.
Okay. Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, gentlemen.
So thank you for joining us today. We remain confident in our continued success, and we are here to address any further questions. Please feel free to reach out to us or our IR advisors, Go India Advisors. Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.